From Harry Hurley Way in the world's playground to the broadcast pioneers of Philadelphia Hall of Fame.
I want to congratulate my friend, Harry Hurley.
You're about to find out why Harry Hurley has been named to the Talkers Magazine list of the 100 most important talk show hosts in the nation. Live from the studios of Town Square Media in Northfield, it's Hurley in the Morning on WPG Talk Radio 1450.
Oh, I can't wait for Wednesday. I want to still have a great second half, but yes, Bill's bringing me a present. Chuck Malamut is here, and that is very, very good news. Chuck is the official financial advisor to the Hurley in the Morning program. We're now in our 26th year together doing this program. Chuck has been in his business for much longer than that, and he leads the Malamut Group at Morgan Stanley's Northfield office. To reach Chuck and his team, you can dial 609-383-2010. The following program is presented by Chuck, a financial advisor at Morgan Stanley. The information, views, and opinions expressed on this program are those of Chuck, do not necessarily reflect those of Morgan Stanley or its affiliates. They are current as of the date of today's broadcast and are subject to change without notice. Neither the information provided nor any opinion expressed herein constitutes a solicitation for the purchase or sale of any security. This presentation is for informational purposes only. Morgan Stanley Smith Barney, member SIPC. Chuck, it's great to be with you. Not a moment too soon. There's a lot going on here and frankly, around the world. It's going a little crazy right now, Chuck.
Good morning, Harry. As I was saying to Kirk, we passed each other in the hallway. As he was leaving, I said, well, now it's time for Debbie Downer to show up. So,
Well, you're very objective. You're very, very good at what you do. I know yesterday, well, look, here's a way to put a positive spin on it. Yesterday we were down, the Dow was down over 400 and some points, did rally to close under 200 down. And it looks like, based on the futures that I've been looking at since I woke up this morning at 2 o'clock, Chuck, that today's also not looking like a great day. And Japan, fortunately, I think they've got some kind of like you
got a Chinese holiday right now for the week. So
thank God.
So they're closed.
Yeah. So, all right, Mr. Downer, what do you got?
So, Harry,
I'll call you Donnie Downer.
Donnie. Harry, oftentimes we talk about investor sentiment and the glass being half empty or glass being half full. I mean, in a relatively short period of time, you think about what has transpired now. The glass is definitely half full with virtually all buyers sort of stepping to the side and just taking that wait and see attitude, because it used to be investors would typically buy the dips, and during that extended bull run that we had, and now it seems as if that investors aren't terribly interested in the equity markets. And when you think about the 10-year Treasury trading below 2%, if I suggested that to you 6 months ago, you would have shaken your head and said, "Chuck, you're absolutely crazy. That can't be happening." So here's where we are. Let's take a look at yesterday all into itself, and it seems as if, Harry, I've been saying this more often than not because we don't like to look at what happens on a day-to-day basis. But what is happening now, I mean, the markets are so terribly fixated on the next set of news that's going to come.
Hate to say it, bad news.
So yesterday, as you mentioned as we started the show, the Dow was off at one point in time in excess of 400 points. Mm-hmm. And around 3 o'clock, the market staged a pretty good recovery rally. And at one point in time, I want to say that the Dow was maybe down about 140 and closed down 177 for the day. And you kind of have to take a look at that and say, well, geez, it's sort of like a victory because, you cut your losses in half. But now, so you had just from the time that the unemployment rate was announced on Friday, and the market was rather muted.
What is the unemployment rate today, Chuck, if you had to say?
Well, Harry, the unemployment rate
say it
is 4.9%.
Yay!
So
this is what full employment looks like.
So
go ahead.
So unemployment is at 4.9%. We posted 151,000 new jobs last month. It is significantly below the projection of close to, I think it was maybe 180, 190.
Right. So why shouldn't the unemployment rate then improve when you underperform?
The good news is, or not the good news, I think what the Fed is kind of looking at here is the fact that the wages have been accelerating, and the average hourly earnings rose 0.5% in January, putting the year-over-year increase at about 2.5%. So I purposely didn't answer your question.
I know. Because
I didn't think it was terribly appropriate to do so, but you can go ahead and answer your own question, why the unemployment rate is at 4.9%.
The reason it's at 4.9%, ladies and gentlemen, they calculate the numbers differently than ever before. They take people out of the workforce that have left searching for a new job for as little as 30 days, and they put them in a category called discouraged workers. And so when you look at work participation rate, it's over double digits. When you look at the unemployment rate, it is this deceptively appearing to be healthy-looking 4.9%, but that's not the case. The number is accurate, but the methodology is very suspect.
Yeah, and then, Harry, when you take a look at the jobs that are being created, I mean, truly, when you look at the manufacturing sector of the economy, which includes industrials, which includes materials, continual, job reductions, reductions to workforce and layoffs and other like. And then when you add in, what is happening in the energy sector, I mean, it doesn't take much to figure out that the 4.9 is really not 4.9. So the Fed has a real dilemma here, because Yellen will speak tomorrow. And ever since, I mean, you think about the unemployment number came Friday morning. We walked out. Friday afternoon was just an awful way to end the week. The S&P, the Dow, the NASDAQ, were all down. The S&P was off 3% last week. This was forgetting yesterday. Oil prices did stage somewhat of a rebound, as expectations were out there that the OPEC countries and Russia would coordinate some of these production cuts. But we've heard this any of a number of times. The dollar, King Dollar, often referred to, experienced a sell-off as well last week, which provided some support for the really, really downbeaten commodities within the energy sector. So,
Chuck, what do you think is the reason, if you had to, venture to find one? I don't think anybody saw this coming. We're off to the worst start in history. I don't think anybody would have believed that this is the way that the first quarter of 2016 was going to get off and going. And what is the reason for it?
Well, Harry, look, I think that, when you get into situations like this, it becomes very, very discouraging for not only investors that listen, to your show, institutional investors, hedge funds, and what is happening now. We're just sort of going. You got this around the world contagion,
and also the tech sector is getting crushed too, right?
Well, I think even more important to that is what has happened as of late in the last several days is that the financials, a lot of the European banks in particular, because of the inventory that they hold on their books, that with respect to the bonds related to energy-related companies, the European banks have taken a pretty big hit as well. And again, not to pick on a company, I'm just reciting the facts. I mean, yesterday, Deutsche Bank was down at one point in time, I think about almost 10% for the day. So when you take a look at this, Harry, I don't want to draw any comparisons to where we were in 08 and 09. I think the world is totally different as far as stability of the marketplaces. And
does feel a lot like that, though.
But
doesn't
what it feels like now is the fact that all the buyers have stepped aside. Because the attitude is, well, why am I going to buy an equity today when I have an opportunity, to buy it later? I can buy it later, maybe 3 or 5%, less than where I think my pricing points are. So if you want to, maybe, you can go in and selectively, buy quality equities. And I think with any semblance of staying persistent and staying patient. And this is really hard, Harry, to stay patient when you have, the kind of markets that we're in right now, because
people cut and ran those years ago, and then things came back, but they put their own losses guaranteed because of how they made their decisions. Chuck, here's an issue that you and I talked about several weeks ago on your program. Kirk and I brought it up in the last hour, and Kirk posed the question then, what does Chuck think about the practical implications that would occur with negative interest rates, and what does it really mean?
I think you
did you hear us talking about it?
I did listen on the way in, and not to be repetitive, but you're absolutely correct.
Thank you.
The fact is that I can't imagine a saver would actually put money in a bank for
them to take some of it,
to take it away. And what happens is that you run a business, you have a Fortune 500 company, whatever it may be. You have to use the banks, to do business. So the question is,
but it would change the way that people do business.
Well, absolutely. And Harry, I don't think, and as Kirk said, it's never been done. I don't think it's going to happen.
I don't think they can afford to do it, because it would. I don't want to say it would create a run on the banks, but people would be very mindful that to only put what you need for a direct debit, or you would not want to keep anything in there, because it's one thing to make nothing or next to nothing. It's altogether different to park your money somewhere where they actually take some of it every month. I don't think that's going to fly.
Well, Harry, look, obviously it's been done in Europe. It's been done in Japan. So I don't want to say it's never going to happen, but I think there's a very, very high probability that it won't happen. But, I think as you and Kirk kind of chatted about, and we're going to kind of extend this discussion somewhat now, it's the Fed is in a quandary. Think about it from this perspective. They came in with that 25 basis point increase in December. I think they were really, their hand was forced in as much that they delayed the action so terribly long, and they probably should have put that in play back in the summer, but they didn't.
Right. But didn't they also put it in play with almost a playbook that there would be multiple more during the course of the year?
So the target rate was, I believe, about 2.5%, and they wanted to get there by 2000. I believe they ended 2017. So the next scheduled meeting is March, and all indications were when they came in December that they come back again in March with another increase.
25 basis points.
We're assuming 25.
Yeah.
So now, and I don't want to sound very, very perverse in this discussion, so please don't take this the wrong way. I think, obviously, as we all know, that the Fed is very, very data dependent, and two of the data points that they look at are unemployment and wages. So if they in fact put themselves, in a room all by themselves and weren't looking at any other forces outside, that being, what is happening in the equity
Freddy
markets.
Krueger nightmare story coming here.
In particular,
they're going to say unemployment's going down and wages are going up, so they could raise but they won't.
Unless, Harry,
unless they're the boys and the girls in a bubble, they won't do it.
Unless there's some market forces, from the central banks to change its position. In all likelihood, the Fed is going to probably stick to that plan. And
in this environment,
and they will eventually or gradually increase rates. Now, all bets are off. There were, when we got to the December meeting, There was about a 75% probability. All the strategists and economists were calling out saying, okay, they're going to come again in March.
Chuck, this could very well be. Let me feather this comment into the break so that I hold Chuck harmless on this, because we don't talk politics on Chuck's program. But this isn't politics. It's only going to sound like it's political. This is eerily similar to 1992, only we don't have an incumbent president running for re-election. But in 92, the Fed was raising interest rates in an economy. Even though we were growing at 4.6% GDP, it was being hailed as the worst economy in 50 years, and people were going crazy. I remember vividly, 1992 campaign, people were going crazy over, and I could look it up, and maybe I will before we come back, how many rate increases there were in the run-up to the 92 election. This is very similar to 1980 meets 1992 all over again. Chuck Malamut continues our official financial advisor to the Hurley in the Morning program for more than 25 years, and you can make him yours by calling 609-383-2010. Tell Chuck and the Malamut Group at Morgan Stanley's Northfield office that Hurley in the Morning sent you. 609-383-2010.
If you're talking about it, Harry Hurley's talking about it right now. Call 609-407-1450. Hurley in the Morning on WPG Talk Radio 1450 and WPG1450.com.
Hey, thanks. We're going to get back to Chuck in just a moment. Our executive program director Chris Coleman checked in with me. Black Horse Pike closed both directions, which is what we forecasted hours ago. It's happening now. Atlantic City Police says the westbound traffic can get to the expressway from exit 2 on the on-ramp. Now, yesterday, the off-ramp at exit 2 was closed, so we'll keep you posted on that. West End Avenue, another area right by the mile stretch, they call it. It's a low-lying area where that water gathers right at the four-way stop sign area or traffic light area. West End closed at the Raleigh Avenue. That's, again, according to the Atlantic City Police Department. Chris is going to keep us posted, and we will keep you posted. Chuck, you were saying?
Harry.
By the way, I did look up, and the interest rates were only raised 1/4 point, and it was right before the election. Actually, they had been lowered during 92 on a couple of occasions. So there was an increase, but just one. And on Election Day, the rate was 3 3/4. It had been, as you know, as high as 6+. Not all that long before that. So it was 6.5 when President Bush became president in 2000. So interesting. Anyhow,
so we went to break and we were chatting about the Fed, and so what happens is that the best estimate is that the next rate increase could very well happen in June, but this is all very, very data dependent, and I think the market right now is searching for answers, and hopefully when Yellen speaks tomorrow, she will add some clarity as to the direction that the Fed is going to take. And you think about this from the perspective, as you and Kirk had mentioned, and we chatted about, negative interest rates or cutting interest rates globally speaking, without the exception of the U.S. So we are going to sort of stand on our own and increase rates. Now,
I would leave the 1/4 point that they raised it right where it is. I wouldn't have done it to begin with because, unfortunately, they did it through the mindset of when times were better and they didn't do it. So then they were just committed that they would do it, so they had to follow through with it. It's really crazy logic the way that I think. I don't work like that. If you look at the circumstances you're dealing with now, if you wouldn't do them based on how they are now, don't do them based on some prior promise or not pulling the trigger back when they could have. And I think it was defendable a number of months before they actually did it. But I wouldn't cause all the specter of going backwards. I would just leave it, but not raise it anymore right now.
Yeah, I think, Harry, that probably a wait-and-see attitude is probably the best fitting for the Fed. One of the things that you mentioned is we went to break, and we'll talk about it. And I know we don't talk about it during this particular segment, but we're in a we're in a year we're going to elect a new president.
Yep.
And like it or not, you may or may not like the candidates from either side. It is what it is, and the market is looking for leadership, and because of the confusion that's out there, that has also not been helpful.
I mean, look at today, for example. The president hasn't turned a budget in 6 years. He's giving a budget to Congress today on the day of a presidential primary for both of the political parties, and the budget has already been called DOA. They're not even going to grant it a hearing, and there's not a single member of Congress that probably will vote for it, even if it comes up for a vote. But yet this crazy budget with $10 tax on every barrel of oil and all these different things that are not going to pass either house, let alone anywhere else, that comes out today on the day of a primary.
Yeah, it's
terrible.
Well, we won't talk about. Well,
right.
It's all about timing, and we won't really.
And that's the truth. It is all about timing. And their excuse for the timing was they wanted to let their people watch the Super Bowl. Okay, so we'll move on from there. In fact, we'll take the bottom of the hour break. We'll come back. Chuck Malamut continues. I know you can't keep a straight face with this stuff, but they actually said it. The official spokesman of the President of the United States said the reason it's always been turned over on a Monday, the reason it was turned over on a Tuesday was because they wanted to let everybody watch the Super Bowl. Well, what about the other 50 years? The Super Bowl's been here for 50 years, and they've been able to turn the budget in on a Monday. So this is where we're at. The budget's going nowhere, so it doesn't matter anyhow. But Chuck Malamut is going somewhere, and he'll be back right after the break. He is the leader of his group, the Malamut Group at Morgan Stanley's Northfield office, 609-383-2010 for all of your financial planning needs. We will be back in just a moment. Please don't go away.
Glenn Beck is coming up at 10 this morning. Then Michelle Dawn Mooney at 1. Now, Harry Hurley on WPG Talk Radio 1450, South Jersey's talk station.
With Chuck Malamut, our official financial advisor to the Hurley in the Morning program, we're at 35 minutes past the hour. This portion of our program is also brought to us by my favorite hotel in Cape May County, Congress Hall, part of the fabulous Cape Resort group of properties. And they've got so many great things and so many wonderful restaurants. The Blue Pig Tavern at Congress Hall, if we're talking about Cape Resort. Obviously, the Ebbett Room at neighboring the Virginia. The Rusty Nail, where we've dined before. The Boiler Room downstairs at Congress Hall. The Brown Room on the upstairs level at Congress Hall. You have the Veranda Bar. You have Tommy Folly Coffee Shop at Congress Hall. And then a whole lot more. They've got the Star and a lot of great restaurants and hotels, including the Chelsea in Atlantic City, Atlantic City's first boutique hotel. Overlooking the pristine beaches in beautiful Cape May, though, is, to me, the jewel of the crown, and it is Congress Hall. Providing hospitality since 1816, 200 years, a unique and profoundly authentic experience that you will quickly grow to love. They have the winter warm-up that's in effect right now. It's a wonderful special. You can either call toll-free 888-944-1816 or go on the World Wide Web, congresshall.com. It's simple. It's a $40 dining and cocktail credit every day of your stay. And then always check, because they have great specials at different times of the year. Check the website, and don't be afraid to call reservations and just say, hey, either any unadvertised specials or any specials that I don't know about, 888-944-1816. And they have the recharge station, the Tesla electric car charging station at Congress Hall, and that is a nice service that's provided to you at no cost. And then depending on the vehicle, I've been told 265 or more miles of adventure on one charge all through Cape May, a beautiful way to charge up on them. Kirk has written in that the tide is lapping at the edge of the road at New Road in Absecon Creek. So we are right now still in the midst, when you count the back bay that brings in more of the tide, at the high tide. And because of the new moon and yesterday's events and the wind and everything, today is worse than it was yesterday, actually. This portion of our program also brought to us by New Jersey Assemblyman Chris Brown. Joining us now, Chuck Malamut continues. Chuck.
So, Harry, we had quite a bit on our plate to sort of chat about, and we spent a lot of time, chatting about obviously the markets and the Feds and where to go. So, if let's take kind of a step back, and we're continue to get through earnings. Coke announced this morning they beat Disney comes after the close. The trend that we're continuing to see is that with 3/4 of the S&P companies reported, Harry, revenues for the most part are in line with expectations. Although you're going to find that, more often than not, that a company misses that top line. The earnings are ahead of expectations by roughly 4.5%. So that's all good news. Now, earnings are on pace right now to fall about 2% for the quarter compared to previous quarters. Although, if we knocked out energy, from the calculation, earnings would actually be up about 4%. But you can't just knock out an entire sector of the S&P 500. So, as when companies get to that earnings season, they go through what is called the quiet period, where they can't make any announcements that would particularly impact earnings, or where they think earnings are going. So, we're through a lot of that. So corporate buybacks, are at pretty high levels right now, Harry, and that could be a real good sign for equities if companies step up aggressively and buy back, their stock. That we're looking for that impetus, to get the market going, and that very well could be something that we focus on. So if you look through the end of last week, companies that are domiciled here in the U.S. have announced buyback authorizations of up to $85 billion in 2016. So that's the strongest start to a year in history. But Harry, what happens? That goes completely. That is ignored. I mean, have you heard, other than us mentioning it a few minutes ago, of the strength of these U.S. companies buying back their shares?
No.
And the reason for that?
Why don't you hear it?
Mm-hmm.
I mean, I'm just going to say it's underreported. It doesn't fit the narrative that they're looking to report right now. Yeah,
so it's interesting, and I know that we talk about the media oftentimes, and
because that would be a good story to tell.
It's a great story to tell.
Yeah, because that shows confidence in their own brand, and that would send inspiring comments to others that, hey, look, they feel so strong about it, they're buying back. But they don't tell that, because I think my answer is an accurate one. They have a storyline that they prefer. And right now the storyline is just like the usual in the business. If it bleeds, it leads. They want negative news before they would want positive news.
Absolutely. And I think if you take a look at one particular TV station, and I'll leave it out, it begins and it ends with a C.
Yeah.
And you just you turn the volume down.
And they have a crazy man that does – never mind, go ahead.
And you watch what goes across the bottom, and you just sit there and you read, those headlines. The average investor, should get very, very frustrated in seeing, the way that news is presented. And we as consumers absorb that information. So, Harry, we've been at this a long time, and it seems it never gets easier. You would sometimes we get criticized for not having the answers. Well, you should know better. You've been doing this a long time.
Do you call in your experience, though, when if you're in the midst of a storm, people call you because they want a sense of calmness? And what I have found in all the realms that I have dealt with you, Chuck, that you're always very good under pressure, and that you're able to provide sobering type of counsel. And I know we don't get into any one particular stock or one particular client or one particular recommendation, but as a general statement to those listening, I have always been very confident, especially confident in Chuck during a crisis, whether it was our hotel days if literally the roof was coming in, and it did, to Chuck's laughing because it's so true, to any type of economic storm. I'll never forget, Chuck told me one time, you can't go to Disney World anymore. I went to Disney World. The first time with my little children at the time was the day, what did they call that, Black Friday or something, or whatever that was, back in the 80s when it was the biggest drop in the history of the Dow. It was a Monday, I think even. It was like Black Monday or something. I could even get the date if I looked it up, but it was in the 80s, and every time we've gone back, something crazy happens, either a terrorist attack or something crazy. But, Chuck, I've noticed that throughout your career that you do handle the pressure very, very well. And these are challenging times because you, I'm sure, have a lot of people that call you and they want to know, hey, am I going to be okay? You know, and a lot of people that want to cut and run because they'd rather have a haircut today than be bald. So it is very challenging, isn't it?
Yeah, Harry, and I think it oftentimes we go back to, in the case of an individual investor or a household, we'll refer to it as, what is the plan? What are your goals? What are your aspirations? What are your dreams? Let's go back and look at the last time we did an update, and let's gather all the information, whether they're assets held at Morgan Stanley, assets held outside of Morgan Stanley, get an understanding of the expenses and the life expectancy and the risk tolerance. And I think once you go through that exercise, what happens is that if you get the answer you're looking for, then oftentimes that can be somewhat calming as well. But in the face of, and I guess the best way to put it is, the markets go to extremes. They trade. It's like being on a boat, and everybody goes to the left side of the boat at once. Well, what happens? Or conversely, everybody goes to the right side of the boat together. So you have to keep your wits about you, understand why you are in fact investing money. What is the time horizon? If you're in this, for the next month or the next year, forget it. Because if you think that you have the ability, to outsmart the market, you're not going to be able to do that. So
they call that trying to time the market, right?
Yeah. So if you have
not a good play.
If you have a long, again, and I seem like I'm repeating myself at times, but it does work. I mean, you have to have a long-term focus and a clear understanding of what you want to get accomplished and why. And I think once you have cleared that, it becomes that much easier.
Closing comment, Chuck.
Well, Harry, look, we are in a really, really tough environment right now. I'm not telling your listeners something that they don't know. We need to just stay the course, understand what you own and why you own it. And I think, Harry, there are some really, really good opportunities here. If you have the ability to step up and add to your positions.
Chuck, thank you. We'll reconvene in 1 week. Great to be with you.
Thank you, Harry.
Excellent information during these important times. Chuck Malamut is our official financial advisor to the Hurley in the Morning program. You can reach Chuck and his team at Morgan Stanley's Northfield office, 609-383-2010. The program that you just listened to was presented by Chuck Malamut, a financial advisor at Morgan Stanley. The information, views, and opinions expressed on this program are those of Chuck, do not necessarily reflect those of Morgan Stanley or its affiliates. They are current as of the date of today's broadcast, subject to change without notice. Neither the information provided nor any opinion expressed herein constitutes a solicitation for the purchase or sale of any security. This presentation is for informational purposes only. Morgan Stanley Smith Barney, member SIPC. We're going to have about 8 uninterrupted minutes when we come back. And caller, we let you know a moment ago, you are next as soon as we return. This portion of our program brought to us in part by Harbor Pines Golf Club, the exclusive country club to Hurley in the Morning. More about them in just a moment.